Good morning, viewers. It's Friday morning, March 21, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. The post Fed rally sputtered on Thursday, with major US stock indexes ending lower after an up and down session. A fresh bout of instability gripped the stock market as concerns around the potential impacts of a trade war outweighed the latest housing and jobs data showing the world's largest economy is still holding up. US stocks closed slightly lower on Thursday after veering between gains and losses as investors gauged the latest round of economic data and the Federal Reserve's policy statement against tariff concerns. Indexes had risen on Wednesday after the Federal Reserve held interest rates steady and said that the majority of policy-making officials at the central bank still had two rate cuts penciled in for this year. Given a worsening outlook for inflation, the Fed's dot plot, which charts its officials' rate forecast, was more optimistic about lowering borrowing costs than some investors had feared. Stocks opened on Thursday lower but promptly climbed. Markets got a mid morning boost from housing data that showed an unexpected increase in existing home sales, which rose 4.2% in February from the prior month, according to the National Association of Realtors. Stock gains eroded from there, however. Though investors gained insight into the Fed's outlook for interest rates and the economy on Wednesday, major questions remain about President Trump's tariff and immigration policies and their effect on the economy. Still, equities rose in three of the prior four sessions, with the benchmark S&P index rallying more than 1% on Wednesday after the Fed kept interest rates unchanged as widely expected and indicated two-quarter interest rate cuts were likely later this year, the same median forecast as 3 months ago. The central bank also said it sees slower economic growth and at least temporarily higher inflation. Equities raised earlier gains. Not only does sentiment remain fragile just a week after the S&P 500 slipped into a correction, the market is set for a big test on Friday. That's when an estimated $4.5 trillion of options contracts expire in an event ominously known as a triple witching that often stokes volatility. At close on Thursday, the Nasdaq Composite fell 0.33% to bring the tech-heavy index's year-to-date performance loss to 8.3%. The S&P 500 declined 0.22%. The Dow Jones Industrial Average shed 11 points, or just 0.03%, and is so far the best performer of the three major indexes this year, down 1.4% in 2025. Economic data on Thursday showed weekly initial jobless claims increased slightly last week, although the outlook may be dimming due to government spending cuts, interest rate levels, and policy uncertainty. The Conference Board reported that a measure of the future economic activity fell 0.3% in February after easing 0.2% in January. Technology was the weakest of the 11 major sectors and the biggest downside weight, which, while energy advanced as crude prices rose nearly 2% after the United States issued new Iran related sanctions. Company prospects have been dimming recently due to uncertain tariff outlook, but Darden restaurant shares jumped 5.77% after the Olive Green owner gave a positive outlook regarding the impact of tariffs on its businesses. Accenture shares tumbled for 7.26%, its biggest daily percentage drop in a year, after the consultancy firm said the Trump administration's effort to reduce federal spending have led to delays and cancellations of new contracts. In late hours, FedEx Corporation and Economic Barometer sank after cutting its profit outlook. Micron Technology Incorporated gave an upbeat sales forecast. Nike's Incorporated results surpassed analysts' expectations. Elsewhere, gold prices notched a new all-time high with front-month futures adding $4.10 a troy ounce to close at $3,040. It was the eighth consecutive daily gain for the precious metal. Copper prices neared a record high. Futures rose to $5.085 a pound in New York, 3.4 cents shy of the record set in May last year. Bond yields edged lower. Benchmark 10-year Treasury notes ended at 4.233%, down from 4.257% on Wednesday. Two-year notes, which often move with expectation for short-term rates set by the Fed, declined to 3.956% from 3.979% on Thursday. Natural gas futures fell 6.4% to close at $3.975 per million British thermal units after the Energy Information Administration said domestic inventories grew last week by more than traders were expecting. West Texas Intermediate crude rose 1.6% to $68.26 a barrel. The dollar spot index rose 0.3%. Bitcoin fell 1.5% to $84,136. That's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you now on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it is all about money.